Welcome back. In this quick demonstration, we are discussing the big delta bars, which can be used as lean bars in the future, where we can create these areas of interest which are going to be retested if market gets there, and we have an edge and probability of using these areas as the time unfolds. Now these are short-term sections in time and price. So the idea is pretty straightforward. When market is going up or it is going down, we are locating the delta of each bar by bar, as you can see inside here. And delta is nothing more than your bid and ask difference inside the bar. So you see here the market is matching left side to the right side. Bid and the ask is matched left to right. So here you can see the sellers are sitting on the top as a resting order on the ask as limit, and buyers are sitting on the bid as a limit below the price. So let's say assume the price is right here. So somebody has to move in one direction or the other to make the market go what we call as imbalanced, or in other words, market goes in a trend mode. For market to go in any specific direction or a trend mode, we have to have one side taking over the other side little aggressively. So if people are sitting here and buy low, sell high, the sellers, if they get aggressive, they will start hitting the bid at the lower prices. So their logic should be sell high, buy low. Now they're getting closer to lower prices and selling at the lower prices. So they're getting aggressive. Buyers are supposed to buy low, sell high, but they're sitting here. So if some news comes or they want to get aggressively and move the market in the up direction, they will have to get aggressive and hit the limit order sitting on the ask. So they will hit, and you can see the aggressions are shown here. And in the end, when the buyers and sellers are done fighting, in the end what happens is what we plot in the bottom is called the delta inside the bar. And why we want to use that, we use this as a context of who won the battle inside the bar. So we're doing this bar by bar by bar by bar by bar. And eventually what happens is somebody will get exhausted. If the sellers are coming down, eventually they will say, hey, I think we came down enough. We are not going to sell further. And then they will stop selling. And the buyers will come up and push the market up. You can see here. If you see this bar, there's aggressive sellers inside this bar, more sellers than buyers. You can see here. This bar was a sell bar because of the delta. Same thing here, same thing here, same thing here. This is mostly like a balance. There was total balance here. They don't know. They want to take down or they want to take it up. And then the next bar came and it was seller bar, seller bar. So eventually we have a measured move which has taken place. We have the frequency hit of pullback. If you look at the frequencies, how we do frequency detections, the reversal using frequency, and you can watch those videos in this search the frequency videos, how we do it. And if you have been tracking those, and if you got the interested levels through frequency, we know there could be a reversal coming up here, up in advance. We also have these extensions and the price levels where market are going to be initiative, where the big players will come and they will reverse at a certain prices, as you can see. But what we are looking at is we are now going to combine the bigger time frame. It could be half an hour, 1 hour, 4 hours. It could be 1 hour. It could be 15 minutes. If you're a scalper, this could be very small, 133 tick range. It doesn't matter. You have to come with your 2 time frame charts, or it could be doing points. Maybe you have 50 points here, and you have maybe 6 points here, right? So come with that information based on your instrument you're trading and the time frame you are in the market, risking your capital. The laws will not change. So 1 minute will not have much power over 5 minutes. 5 minutes will not have power over 15 minutes. And 15 minutes will not have power over 45 minutes. You got the idea. So you choose your higher time frame based on your capability to understand the market. The logic will not change. We like to use a setting where we can swing and identify these turning bars for multiple days. So here, if you look at this trend, it's going up. So one thing we have identified earlier also, the pattern, the divergence pattern, we talked about it in a couple of other videos. So let's revisit that again. Market made high, the value, the yellow bar, value area, POC value went high. But what about the delta? We have a delta divergence. This is called a value delta divergence, as you can see. So between these two bars, yellow went high. The buyer pushed it, jammed it. They were not able to push it forward because they were trying to get away from this area, and they got stuck here, right? But look at the divergence in the delta. So this bar is basically my delta bar, which I will reference in the future. So what we do is we mark it. The entire bar height. All right. And what are we expecting? We're expecting when market goes away from it, it comes back to it. I'm looking for a reference point to take these as a lean to take shots. Right here. See that? Watch it. So we had a lean coming from this area. We can't see it, but we can see it from the right side, and we're going to take shots. And we're not going to be using this for a long time because remember, we don't know which kind of players were involved at this point. Well, there are multiple time frames involved, doing multiple things at multiple times, having multiple agendas in ES market. Maybe they are hedgers. Maybe there are some robots. Maybe there's some news. Maybe they want some market maker to hedge it somewhere. They're doing some buy-sell programs. There's so many things happen in ES market. So we just don't want to use this forever. So you will use it immediately when this action was identified, and next half a day, 4 hours, 10 hours, whatever it might be, based on how you identify this, we're going to lean against it when you come back to retest it. So we found it here in this area, came down, retest it, use it. So that is how you can identify in the sequence of bars. We are looking at, what are we looking at? In the sequence of bars, the biggest delta which we see. And it has to be in the right context. And if you have a divergence context, this is very powerful. Okay? And we lean on it, and there we are. We leaned, took the profit, we went home. Next, we had one more. Now this value went low. So what is going on? So somebody is trying to hold this blue zone, which we predict for next day, and they are trying to crash it, and somebody is trying to hold it. But this, even though value went low, what happened in this bar? This bar was a biggest bar at 240, which is the biggest positive delta bar. So what we can do, So now if you're playing the short, you have to look at the whole market context. If you're playing the short, we already played the short. Now this buyer, if you see here, value went higher, higher, delta was low. Here, value went lower, low, delta was positive. Same opposite effect have taken place here. So this bar is also of interest. Now this is end of the day. Market did not come back to retest it, so I will ignore it. It came back a little later at late night, okay, around 9 o'clock, 10 o'clock, or 10:15. This was the biggest attempt for the buyers to stop it. So if you mark it, so what we can do, you can mark it, but see when the context can be played next time. So just mark it like this whole bar. Now we know that, hey, this bar, even though they tried to put it down again, it was rejected and came back up. But remember, this is the biggest delta bar at this point. Look at the sequence in the bottom. Biggest red bar, biggest green bar. So I have two things going on now. One side is going to be the effective side. So now let's say in the morning, you get up early morning. At 9 o'clock, what happened here? At 9 o'clock, now you see coming in the market, 9 o'clock, we want to go long above blue, as we say, or short here. If you go to our Twitter channel, 369 Forecast Twitter channel, you will see that we post these levels, right? And then here they are. So I have to make a decision at this point, which direction should I go? So at this point, when our market opens, I have this big delta coming from this, and if I want to play this delta, only option I do have is to see if the buyers really showed up. And we also want to see if it is a T pattern. Our T patterns, where we see this value is jammed on the other side, that on the bottom should be inverted T, on the top should be T for Tesla. Think that way. So this is inverted T. The value is jammed on the bottom of this bar, so I can lean against it. I see a big buyer, lean against it. So what's going to happen? Market is going to come close to the retest of this buyer or this bar. So this is all my buy entry area. Now I have to go back and check on the right side, where am I going to go long? So I'm going to potentially, based on this lean, looking on the left side, going to go long. On the bottom side, we have cumulative delta, which is also moving in the positive direction based on the moving average applied on cumulative delta. There are videos on that. You can check it out. There are a lot of patterns in this one as well, but you can see at least the easy way it is, we have the buyers are moved up. So I'm looking at taking a positive bias from this T action, looking at this lean, looking at this value T jam, and the buyer showing up. When the bar opens, comes close to this guy, this is our long. And it is happening in this time frame. Okay, so that is how it is. You can play the direction. All right, so now what happens next? As I said, do not assume that the same buyers or sellers going to keep holding forever. They will reset. Maybe some specific buyer sellers came in, did the business, so now we are looking for something fresh. I already consumed the areas, so now I'm going to look for something fresh. And if I'm in the trade, I make my money, I get out. This is all days already over actually, right here. So what do I do next? I wait for the next. Now, end of the day, these are not really real deltas going on, but it is happening at exactly at the close. You will see this extreme delta at the close. You can see they're not really real. All right, so going back to the same thing, we are at the extension on the top side. This is why we have these lines on the top. From this blue area, we have this line, this line, this line. We have frequencies. We can say where we are heading. Now what I'm looking for on the top, looking for the T. This is the T. The T is there, and you can see when the T is formed, look at this bar. There was a lot of buyers and sellers. So let's zoom in a little bit closely on this. Right here, a lot of activity around noon time. Look at these buyers that want to go initiative. They want to break out of this. Sellers came, it got jammed on the other side. So now this is a very interesting scenario where we have, let's zoom in down a little bit. Look at this. So the buyers are now actually jammed. We have to look at other software we have, but look at this one only, just get the idea. Market opened here, went down, closed up here, and on the top you see consecutive 1, 2, 3, 4 aggression of buyers. Right? What are they expecting? They're hoping that this aggression people can see and they can move forward. Now this could also be stop loss. If you're shorting, if you're shorted here, somebody may have shorted all these things, going to be a short here too, right? Looking at this, somebody shorted here and then somebody went up, took the stop losses and they moved it down. You can see all this behavior. So what do we do? Now market is, I think, waiting for some news possibly, but if you look at the drift on the cumulative delta, drift is moving on the short side. Market is doing a retest of the price, but the selling is going on behind the scene, which is seen in the cumulative delta, and we are below the moving average. So this is divergence going on between the cumulative delta and the prices, and the T shows up here. Now delta is this not that big, is because this is a war which is going on between buyers and sellers, but what the lean we have is on this bar is the divergence, retest, T. So what I will do, I will mark this. Now remember, this is not a one single point range. We are doing it in a very different way, identifying big players differently, but with some logic. So this lean was identified here. What do I need to do next? We want market closed here, it opened here. It will try to see if it will try to get close to this value, and it will try, these buyers will try to see, hey, can somebody else come in? Because this is a trapped buyers. So what do? They will try to come close to this guy, but our lean is this right here, lean inside a lean, where we can say this is also interesting area for us. So it get close to us. In right here we've identified it, that's close to us. Now this is a retest. First time, second time, third test, retime on this is very strong. And off it runs down. But it all happened because of this is trapped buyers, sequential trapped buyers. We have a T on the top, which is the jammed scenarios, big war going on. You can see a lot of contracts on both sides, but if you net it out, A minus B, this looks like a balanced scenarios, but it is a lean on the short side. We can see from kind of cumulative delta, and you can see next one, the buyers actually were smashed. They tried here big time, push it up again to break it, but they couldn't do it. They couldn't hold it. Behind the scene, you can see the drift is on the short side. Now this drift is a little bit of a challenging drift, but next what happens is now we see a clear delta right here on the short side. You can see on the short side they are trying to go the way they were trying to go initiative here on the top. This is why frequency, if the frequency has come here, that will override everything else. That's very, very important to understand. We have very sophisticated level 1, level 2, 20 tools. We can see things beyond the scenes very differently. I'm just showing you this very easy way where you can see this one is pretty much a lean on the short side. They wanted to go initiative here, but they wanted to go initiative at the bottom, sequential sale. Now we have to see if there's a follow through, but this is again a bar of interest. So what do? We just mark the bar of interest. What are we expecting? Next one, market to come close to something I can go short at. The profiling concept says this is the balanced area, so at least should go close to this guy. So they're trying to scare the sellers off. They could have just gone next bar straight down, right? When the first time it happens, this bar, if you look at the value, it is balanced, but it is a seller bar. So what we can do is our risk has to be reduced. If I am going short here, my risk is at the top of the bar. If it comes close to me, the midpoint, which is our value, my stop loss has been reduced. Okay. Now this is not a scalping scenario. We are taking a 5-point loss to make 25, 35, 40, 50 points. We are trying to get the whole range of the day, 1 to 5, 1 to 10. You can trade it the way you like to trade it, but just trying to tell you, this is a bigger picture, correct? So we haven't found a way to refine it, but this is all happening at the red area zone right here. You can see that. And then you can see it cracked it, gave you one more chance. So this is where you can see the T was there, this T was tested, this T was tested, the sellers, and then this was trying to put pressure on them, then they pushed it back. And now you can see this, if you add this to the bottom and this to the bottom, this whole thing becomes a red bar. You can see it here, big huge red bars, two of them, boom boom. Now it is happening at the late of the hour, but you got the idea. So this is how you can identify those bars and trade it in a now we haven't put any deltas on the shorter time frame, sorry. All right, so this is how we can do it. So now let's see what next can we find. Now this day market went down, short. Now again this is happening at the close of the day, 5 o'clock, so we don't really, it could mean something or not, we can or not, we don't know. Okay, I'm not going to comment on that too much, but you can see the selling was initiative. People are getting rid of the contracts, so if they can, you can use it for lean, just test it out. If you use it for the lean, if you don't look at the time, this can be used as a lean. Same rules apply. Look at this consequential trade, which is right here, right? Let it come down, retest it, let it come down to retest it, right? So it opens here, it closes here, it opens here, goes up to that box, and this is a short. You've taken the short nicely. So this is our thing going on. Now what happens next day? Let's do the next day. Now here we have a little bit of market moving up and down. Now again, we are short from this area. Now we have to figure out if the frequency has been met. We are looking for reversal on the other side. So we need to know the location. We are looking at things at our location only, not every bar. We're not trading any bar. We don't entrust our commitments at every bar. So we are only interested in committing at a certain location based on our superior technical analysis. So at this point, now this is a very large day. It went out of ranges, which is okay. News came, but doesn't matter. So we have to see where are we going to go long and short. Let's say frequency was here. We could have doubled it as here. We don't know. We are not doing this frequency analysis at this point. But we can see we are sitting here and say, okay, maybe it went to the frequency 1. What next? Bars are coming in, but we have to find a lean. I need a T. Reverse T came here. But do I have enough? The T is there. This is the biggest seller bar. Seller bar is here. So which side I'm going to trade? We have to figure that out. Okay, so let's zoom out a little bit. So this was the biggest lean bar. This is again lean. The two bars are there after sudden small bars. This was a big one. Then we up and down. This was another big one. And this is 9:45 and this is 10:45, 10:30. It's almost 45 minutes. This is very interested scenario for us. We'll mark it. Okay. So what we will do, we'll mark it. And we don't know when it comes here, we will take it. We look at the situation and we go to the right side. The whole bar area is mapped because of the delta, and we're going off the delta. We are reaching towards a given frequency, so it is giving us a chance to ride this trend in the middle. Again, same pattern happens. Delta is 1, it is in balance. What I'm expecting, it will come close to this, we'll take it. If it goes far too away, we'll start to taking the trades in this area itself. Okay, and this is the bar of interest. This is now, these are ranges which are kind of 10-12 point ranges, but we're not interested in taking 2-point scalp. We're taking at doing something different with this knowledge. Okay, all right. Tactical trading is going on. So now it gets out, comes to this. Where's my lean? Now this bar has sellers here on the top. We have value area, so this can be a lean of my stop loss. So we have reached that area. I'm going to reduce my stop loss, and here it is. And also the buyers are jammed. So at this point, I will use this as my stop loss few ticks away, and I will start taking shots. And we get 30 points. All right, so now the T has happened here, and the buyers are showing up. Now we see this initiative buyers are coming in. But I'm looking at this is a very big bar which came. It did not do much. T was there as well, everything was there. So only option we had was in the next bar. This is the lean bar we found after this two sells. Now we have to keep track of buyers and sellers all the time. So this could be a buyer who's going to buzz all the way to the top. A sellers will push all the way to the bottom. So if this is real, he will hold it and defend it. But it was, so the pattern was correct. We had delta, we had the value moved here, but I don't see any aggressive buying in this. See that? There's no aggressive, like here, clear imbalanced buyers. It's totally balanced. Even though value moved down because of sellers are moving down, 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 but value also moved down, but we don't have any context of the frequency. We don't have context of anything else, but looking at just bar by bar, there's nothing showing me that the aggressive buyers have come up. But this is a lean bar. So if I mark this bar, the next bar, it closes here, the next bar opens right here, and the buyer showed right in the bottom, and he booms up. 12 points. Which is fine, no problem. If you wanted to wait and see, then what do you have? To wait for the next bar to come close to our zone, buy zone, right here. Value area and the bottom. And the buyer is sitting there. So that is, it came very close to us and then gave us 8-9 points. So the war is going on. Now this bar is now, again, it's not that super big, but it is big enough, right? But we don't know. So, but we are also tracking this two big bars from here. So same thing happened. It pushed up to the top. You're going to go on top. We came here, get out, reverse it, boom. Now this requires quite a bit of professional trading experience, which is okay. But this is in our sequence of events so far. These are the two biggest sellers are in control at this point. So we just wait for this guy. He tried once, pushed it down. Now we were here. Now if we are looking here, that hey, is coming back to this guy. What are we expecting here? Look at the delta coming in, right? This delta, look at last 3 fours. And look at the cumulative delta on the left side. Always keep an eye. The buyers are now basically doing some basing pattern here. See that? Price is going down, 3 touch. Buyers are coming in. They're quietly buying it up, which I am suspecting that they will push it up. Why? And then also look at this T. And after this T happened, look closely inside the bar what has happened. Look inside the bar what has happened. Right here, 2000 contracts, right on the top. So this is a very strong level. The T, value area, yellow. And we have this buyer expressing we have one buyer. So this block, it looks very solid, right? Short. When it comes back to test it, we have possibility of stopping loss of this one or at this one. And what happens? We are reaching that spot. So when market, now what is happening here? Market went higher, and the delta did not. That means the buyers were not able to control this bar price range. So it fell down, but it fell down. Now we know when it is coming down, the delta is not, it may have come down here quickly and then went up and down for a while. We don't know that, but we can see the delta. But we can see the cumulative delta, what is happening in the smaller time frame. Who is under control? So this is giving us the hint. Delta, cumulative delta, and divergence on the price and the range, and the T hidden, and retest of that. We have to take that, and based on this pattern that the buyer is very close, sitting on top of the values, but people are looking at this too. Professionals are looking at it, right? Does not mean they were not stopped you out, but this was the smallest possible stop loss. Just wait for these patterns. It takes time and practice. Lots of focus. All right, and we took off. Now we are back into this. So what is happening here? This is strong delta. This is now, if you look at this, this is the biggest bullish delta. Very bullish delta, small negative delta, again bullish delta. Look at this one. It opened here, went boom on the top. It closed here as well. So look at the delta here. So if I'm waiting for the bar to close to make my decision to go short, will I short here? But look at this buyer, more buyers. So I'll be concerned, and look at this whole bar is won by the buyer. So I'll be cautious about it if I do it again the same way. Here it was a negative delta at the close, but we took first test, retest, we took a risk, but we had it lean. We had this small box area as a lean based on what I showed you. This area is if I'm going to take a stop loss, if it gets here in this range, I can take a shot. And you can see delta is not bullish anymore, right? It's a lower low. But here, things are different. We're coming off from the bottom, which has put a lot of T's. T's here, T's here, T's here. And I see initiative. You can see a buyer here, which held a rejected. Now this is showing that this is a very strong buyer who means business. And he means business right here again. He means business right here again. So I will be cautious looking at this delta. Last 4 bars of delta, cumulative delta. If I add this and this and this and this, we are net positive. Okay, and if I just lean on this bar, which we did on, you can see this positive delta and this behavior and the T. I have this lean bar coming up. There's always a buyers and there's always a seller. There's always a two-side manipulation going on. If this is a lean bar I'm leaning on, and I filtered it further, and this is where my entry is, and it is holding, and I'm already up 25 points. So now I'm here 20 points. Now I have to make a decision, hold or fold or short. Right, so I will now look at my blue areas too. Remember, went back to the blue. The other here is blue is here, other blue is here, and look at this. What's happening on the cumulative delta? So the cumulative delta is still positive. So I be cautious. So I'm looking for some evidence. Are these buyers gone? I don't know. So I'm pretty sure this guy is going to be. These guys are going to now go and test this seller who is holding this range right here, which we marked earlier. This area, see that? So they are going to test each other, right? That's what they're doing. They're testing this. Are you serious to push me back, or I'm gonna take you out? Are you gone? So they are testing this. They're testing him one time. He pushed it down. He is still there, right? He was there here. He was there here. Now they have to come back and test again. So now we are testing again. Are you gone? But this guy also knows that, hey, these guys are coming very aggressively. He's also looking and say, hey, I am gonna not be panicking until they come to me here on the top. So he let you come in. It's okay. Buyers are aggressive, excited here. If this bar was just like this, fully aggressive green, this guy will give up. He will not fight it. But he's also watching. These are also watching. So they took it to the top and say, what next? What is your chess move? What is your chess move here? He's right on the top, and he took it back to the top. What is your chess move now? Are you gone or are you coming? Banks are fighting with each other with thousands of contracts. Boom, boom. What next? Right? What we can do, we can look at the delta, who's winning at this time frame. And we know the context is right on the top and the bottom. Now this is aggressive. 1, 2, 3, 4 aggression bars. We have to wait for this. We have no decision to be made because this is not a T bar. It is sitting here. This is our whole range of stop loss. So we want to, let's see if we can come closer to this guy or this guy, right? So we are going to use the top range as anything else right here. We're going to use this top range as our stop loss lean. And we put it on the right side like this, logically speaking. Okay, I will extend it. So this is our refined area. Okay. Okay, if this gets here, and it does, what now? So if I want to take a shot, I have to hide behind somewhere here and hope they don't blow me out. Because I'm doing the right thing though. This is the question. I am at this point at the. So where was the bar open and where did it close? Let me move it a little bit to the left side. It opened here, went up, got rejected, came down. Close, open, close. So they really pushed it down. So what we can do is, instead of picking up the top tick, if this is the risk you want to take, because we entered in this sell zone, we can stop loss is here in the lines above, here or here, right? Or this is a stop loss. But this zone is supporting it. Stop loss is here, it came in. Then what we do? Let it go here, little bit higher. I will put a stop limit here to get me in. It may still give me some headache for a while. Stop loss is here. And remember, we are taking small 1 to 5 ranges. We are looking at $1,000, $1,500, $2,000 per contract ES. Long ranges. So we should be able to take 200, 300, 500 losses too. That's how it is. So here it is. If you wanted to wait for this, it opened here, got rejected. Open, close, rejected. This is gone. This also can be our short area. So we are just, if you are a brave soul, you can do it here. If you want to be a smart soul, you just wait for here and take it. It's not about picking the top tick. It never is. So at this point, we are here, and then you can see that the sellers took over. Cumulative delta is on the short side and stay on. So I hope you get this, what is going on. So this day is over, and again, at the end of the day, they all are closing the contract. So this is what I'm saying. The last bar may not be of any value to us. All right, so next day opens. So now here, this is the biggest, look at the last 7, 8 bars. Look at this, this is the biggest green bar. You can see this. So this bar could be of interest to us. So is the previous one. But look at this, all this balanced, imbalanced bars are controlling this bar, bars are controlling this bar. So this whole thing is of very much super interest. So what do we do? Well, we mark these areas. Okay, and these are very big ranges, but we're not trading this whole ranges. We are just letting things tell us where I should be doing my business. So if I take this big one, right? If I take this big one, they are both valid biggest things we see here. This is the biggest one. But if this is, I'm chopping this bar. If I make this double, this will be one big bar and one big delta. So that's why you have to look at 1 or 2 deltas together and say, because we are synthetically chopping this into 2 bars, which actually is moving continuous fashion, right? So this is one big bar itself. So this is my whole buy bar. This whole area is my big buy bar. So let's think it that way. So I'll mark this, and I'll mark in the top 2. A lot of buyers here, a lot of buyers here, a lot of buyers here. And also if you look at horizontally to the left side, right? This buyers here and buyers here and buyers here, buyers here, and this buyer overlapping price buyers right here. So let's look at right here. Let's put a line here. Let's also put a overlapping, looking at horizontally. Here the value and the buyers are there, right? So this is all critical points. I'll just mark it because this already happened early morning before we start trading. We just mark this. Now this is also critical. These value areas are again matching value areas with buyers, buyers and buyers, buyers and buyers on within 3 different bars. They already mapped up. Okay. And the market opens. What are we going to do? We don't know at this point. This looks like they want to go short. 8:15. 9:29. This looks like this is the biggest green bar. So I have to make my decision based on this. This is a not, I want something really outstanding delta bar, right? No, this is all not average, average, average. So the one big comes in last 7, 8 bars, this is of interest. And we mark it. And coming on the 2-day frequency to frequency analysis on this time frame, we know that this market, when the market ended, we printed this when the market opens again. At market opens 6 o'clock again, we printed this 7 o'clock, 8 o'clock, sorry, 6 o'clock. We print it, right? So we know that it's going to go inside the box. We already have this context, and this is also frequency. You have to check the frequency ranges based on our frequency technology. This is we manage 3 frequencies. So we're coming from that frequency reversal. This is where we are just going to try to go. Keeping that in mind, we say this has been interested zone for us, right? This is our interesting zones. This is our interested price ranges. So in this interested price ranges, I have marked these the way I explained. Market opens. We have to take some bias, but we have to do it with a lean. So this is a lean. So my lean is given this scenarios that I should be taking longs. Coming out the frequency, the cumulative delta is not meeting anything, because remember, cumulative delta is looking at it a little bit differently. But this is inverse cumulative delta. Price is going higher, higher. Sellers are trying to be there, but it's inverse divergence. You can just see it here, lower, lower here. So this is inverse divergence. So if I'm looking at this bar, so I let the market settle down. If I want to go at the open, what we can do, what we cannot do, but this is our interested zone which we have created. And then also inside that zone, we are looking at where can I hide stop losses, which behind, if I'm going long, I want some other buyers in front of me, big buyers in front of me. So this is where I can hide behind here, hide behind here. These are all good areas to hide. All right, so market goes up, comes down. At the open, punches up again, comes back again, punches up again, comes back again, punches up again. So this bar really did a good job for us, because there was a biggest bar right here, these two. Now this is a biggest selling bar which showed up here, this area. So we will have to mark that too when it is happening early morning, not at the close. So this is also going to be our interesting zone. But I need something with the T, right? So I don't see any T's here. This is a very big range, but T is there as well. This is where the T is at the bottom, but should be on the bottom side of things, but that's okay. But this is where we see a lot of buyers. We make that decision based on the delta alone. Now this is on the top T. This is the top T. Delta is negative. We see value went higher, high, delta was not. So this is again a lean bar for the short side. So there will be buyers and sellers every place. So you have to come with the pattern. So this is our pattern we are trying to follow. Now we are not trading this. This is again 15. This is where the big players are being identified, and we are playing the retest on the smaller time frame. All right. So where we are, we make 10 points and we're done for the day. 20 points done for the day. We have to master the location. This is where we are dealing the buyers and seller zones. And this is the bar. Okay, big delta bar came in. When this market opened here, this bar was doing its business, closed here, delta was printed very negative. What do? I want it to come to close to my top or the yellow area. You can see it went here, gave you the retest. This is where it is. So if I do this retest, this is my stop loss zone right here. Came back to retest it. This is my zone, stop loss. I can start trading here because it can go anywhere inside this zone. So my first time it comes at this point here. Now we can look at the cumulative data as well. Now, even though we are talking about this point and that point, but look at internally, it is still sellers are in control at this point. So we can lean on that at this point. At the same time, if you look at this T on the top, this is also T top bar, right here. So the T is here. This is my other stop loss area. So let me extend it on the top to this area. So I just took out this bar, but this bar is of interest. It has to come back into this. And this is my stop loss area. Most of the time it will just hit here, but if I can taking a short here, my stop loss is here or here initially. So what happens? It does what it has to do. This bar is of interest, is the area. Look at last 4 bars. This was also delta, but T was there on the top. So this is why it was very interesting bar. So what happens next is, again, we are in early 90 minutes. This happens again. The T comes here. Now this T is very interesting. Why? Because as I said, this T is very interesting because all the sellers are here and they jammed, the buyers jammed it all, the value went up all the way to the top. In the top 25%, I like this pattern. We are having a T here, we are having this. So this is the bar of interest. Now this T showed up here. If it was T was here, I'd be much happier. Now this T up showed up here, but it's all happening in the same area. This is again what is happening here. Buyers are trying to, this is probably a flush right here, or the stop loss right here. If you look at this, everybody see this. What I'm saying is professionals see that too. It's not only we can see this. So they are people are taking shots. They saw this, right? They saw this first. Market came up to it, they shot it. They shot it. Now this again, I showed you this area, they went again, shot it again. Now, 1 time, 2 time, 3rd time, it will flush. So then people who are doing it way too late in the game, what is going on? They are getting stopped out. This is where they are stopping them out. So now we know we have Mandela levels, which we can use to see how far they will be going into stop loss. So that Mandela is placed here and we know, okay, that is level 2 technology. You can see the videos on L2 on 369 channel, but here it is. So now when this is done, now you see the new sellers have come in. Look at this, right? And this is where we are also at the end of the bar. We know that T has also formed. So, and this, look at this initiative cells coming from the T. Now I can be a little bit of comfortable that I can take a shot. But this bar area is still of interest. So if I want to take a stop loss, where can I take a stop loss? This is all my hiding areas. So let me move this a little bit here on the other side. I don't want to move all of you, but I think let me just move it. Okay. So if I have to always look at my stop loss. Where can I stop? What can I stop? Everything is done correctly. Everything is there. Areas are correct. Everything is going on. But remember one thing: sellers are in control temporarily, but we are also moving off the frequency. We are off from this major frequency, coming off the bottom. So I don't expect a big move down because we are looking for a big move up. But we also saw the buyers and sellers are in control all the time. We are doing our business in both direction. So if you want to do only long duration, your business is long, you're done. You should not be doing anything. But if you want to keep doing it again because you think this could be another frequency down, that's fine. Because you're looking at sellers in control, that is fine as well. The sellers are still in control officially, but the 3rd touch of cumulative delta, as we explained earlier, is a good interest. So 1 touch, 2 touch, 3rd touch is of interest. And from this 3rd touch, we see a big divergence. And it's going to be a big move coming up. We already saw that. But it is coming from the buy zone, which we identified earlier. But in that same thing, market is rotational. We are talking at the short side of the situation. Here we find the lean. As we showed here, we found this lean bar, we found this lean bar. And this is a T-based lean bar. This is actually the real big delta divergence bar. This is center right, go to the center, go short, and keeping in mind we're coming off the big frequency. So don't expect too much big moves down. Then you went to the next bar. You can see it's flush out on the top stop loss because of this situation. This is where it is. It went here one time, two time, third time, fourth time, flush. Then we're looking for initiative on a T bar. Got initiative. At the close of this bar, we take a short because delta lean is already there, and then it's coming from a T, and then we can take our profit. Remember, we are hitting now in the buyer zone. Buyers are going to take over. And this is the third touch of cumulative delta. We expect a big move up, and it does. I think I spoke so fast for the last 50 minutes. We only covered a few days, but you got the idea. This is a story which goes on and on and on and on. So I hope that makes sense. This is how you can do your business. Now, inside these bars, which direction you want to go, same logic happens. Look at this. You can first of all look at the delta accumulation is going on. Coming off this, if it gets into this bar, it could have gone. Some people would have taken a short and scalping and said, oh, we are the greatest. Or some people say, hey, I'm going to wait for a big move and go back to the retest of this prior blue to blue to blue. Right? So we also know that market moves green to green to green 75% of the time. So it doesn't mean this green. So look at these greens. It's green. It went to this green, boom. And then went to this day's green, boom. And this is also double green. We already covered all those things, right? So this is where big swings are coming into picture. You have to keep it all in mind, and with practice and methodology, which we coach on, which is the master of all coaching, this is what it is. Now let's go back to this last one. Let's close it up. After this, we saw a big. Now if you look at this bars like small, big one. Now I am interested in the big change, right? Change, the flipping. And look at this one, initiative on the top. Now this one, they try to push it down, but look at this net delta of this bar. Delta means buyer, bids minus ask, is mostly a buyer bar, right? If this is a buyer bar, it could have gone straight up, like here, boom. If it is a balanced, how do we know it is balanced delta buy bar? Because the yellow is in the center. My interest is coming close to the yellow, right? And this is where I will take my stop loss. And this is my lean as well, right? So this lean has to be built. Now again, as I said, we are chopping the bars. There's no chop scenarios. 1 minute is your chop. 5 minutes is your chop. How about daily? So the daily, people, they're chopping at daily. Weekly are chopping at weekly. Monthly chopping as monthly. Quarterly chopping as quarterly. Yearly bars are chopping at yearly basis. So your chop is your chop. But this is of interest. We are marking the interested things, and this is of very interest because of this winning bar is this. But I don't have any other lean in this bar. This is a lean from the previous bar, and this is a lean from this bar. I only have two leans. So if it could have gone here, or it could have gone here to retest and gone up. But delta is showing delta breakers all data, and this is, and now this is also a T bar. See that T at the bottom, perfect. This is a super nice T, and the buyers are holding this T. Same thing here. See this one? The T means the value has gone to the bottom. Inverted T at the bottom, normal T at the top. We discussed that several times before, so hopefully it is making sense now. So this is again a T. So these are all my T. So I'm coming off the T, and we're getting initiative off the T, right? And this is where we say above this, go long or short. So this is what, when you're posting these levels, there's not blindly you have to do it. You have to put these levels in context, and then we told you it goes from green to green to green many times. 71% of the time it will go to the teen and do his business, right? That's all there is. But which green? This is where we qualify those greens with the frequencies. How do you find frequencies? We already discussed that. We find last 4 months, the distance between these blue lines we give you, and then we find the frequencies. Okay, so Do not do anything blindly without any context. And this is just showing you last 15, 18 days. So you have to go back 4 months, find the frequencies. We have level 2, we has automated all this for us, for people who are in this level 2 programs. But you can see, if I just show you just the context, but you have to do it in the 4 months, keep track of this, what is going on, right? We look at this from the highs and the lows, we put it at this right here, right? So this is one frequency. So I know that market is going to this frequency. It's also green is sitting there, frequency is coming there, it went there. We are looking at a big, huge moves. Okay. How big was this move? Almost 90 points. One contracts, 5 grand. Yes, options, huge. This is designed for different things, for different people. But this is how you find the frequencies. Now from the top, now this is only one frequency I just showed you. There are lots of frequency. We are tracking the 4 frequency. Put on the bottom, where it went? Right here, boom. So this is how you can do it. I think it's been almost an hour. Let me thank you for listening, and let me thank you also for keeping track of all this, and hopefully you can get some great ideas what's going on, and hopefully you can continue to make some progress. And at this point, if I'm looking for the smaller frequency to end, right, and then 1 touch, 2 touch, 3 touch, I'm looking for the 3 touch technology, market is going to reverse. I got to look at some delta leans. That's all there is. And look at the delta leans by this. This is my delta big bar, right? On the top of the frequency, looking for the big red bar, which came here. It was retested. You can see this. And the bottom, I'm looking for a big green bar, which came here. I'm looking for the retest. And this is also now that I need to find my stop losses, right? If I'm breaking from here, T is here, T is here, and bottom is already at the bottom side. This is the biggest lean bar. This lean bar has big range. How do I decipher to minimize my stop losses? It can be, I have to find some big buyers to hide behind. These are the buyers, these are the buyers. Look on the left side. So I have buyers here, a bunch of clustered buyers are here, and some of them are sitting here. So it could go here, or it could go here. We don't know, right? So we have to, not at this level. Now if you go to the zoom into the lower delta, then we can look at delta on this one, right? So I hope you understand. And then again, we discussed that several times. Always put on the third touch on your cumulative delta, 1, 2, and 3. Third is very powerful. So now the third is coming. 1, 2, 3. Boom, 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 very fast. 1, 2, 3, third. Now this third is coming from this. You can also draw it here, but this is a third. Third is of interest. This pattern shows up aggressively. Here we have double top, right? Double top, went higher, higher. There's no buyer. This is also reversal. But this third touch is super fantastic. Check it out. And there we go. So we had third touch coming from this. So now I am having delta. I have this delta here, so I can go initiative here at this, making sure that if I go along here, it can come down to this guy to test it too. So I have to hide somewhere here. All right. Thank you so much.